to the Compass. Recording this episode on Wednesday, June 11th. Another exciting day in markets for sure. With me, as always, is President, CEO, and CIO of Olive Resource Capital, Sam Pelaez. And my name is Derek Macpherson. I'm the Executive Chairman of Olive. We don't talk a lot about ourselves here on this show, but Olive had another really solid month. We just reported our on Monday. A couple days ago, we reported our investment performance for May, and continue to be doing really well in Q1. Sam, you want to talk a little bit about that?
Yeah, so we reflecting some changes to the regulatory feedback, we're putting different, our performance numbers that we post to the public look different. They're more consolidated as a value rather than on a per share basis. But on this report, we've effectively, give or take, made about $500,000 net of all fees and costs since March 31st. For us, that's a pretty good number. On the base, our portfolio is now up to about $8 million, which is pretty good from where we started. And also, I don't have the performance numbers for the year on me, but I think we're looking at, something like 30% return or thereabouts, which we're very happy about. Now, I know some of you are thinking, oh, well, but this name that I hold in my portfolio is up X and X and X percent beyond that. But trust me, for a portfolio, this is pretty damn good. I've been around doing this thing for some time. And the big reason we're talking about this is because you have to talk about it when you have good performance. It's a rule.
Yeah, we don't hide away from our bad performances either. But when it's good, it's a lot more fun to talk about. And really, I think a couple key names in there. Mostly gold names have been the ones that have been the ones that have been outperforming. In particular, Omai, where I'm a director, but also Troilus has had a really good run, and obviously benefited from the strong drill results of Sterling that we talked about last week, or I guess last episode. So I think that's I think we're one of the things that we focused on for this year is focused on over the last sort of 6 months, mostly late last year, was concentrating the portfolio, fewer higher conviction names with larger percentages of portfolio, and I think that's paying off as we're seeing those high conviction names deliver on the investment returns, and then obviously that's dragging our overall performance up.
Yeah, absolutely. And I think in particular, and maybe I'll mention this just broadly, we're not a fund. We don't have a benchmark. Actually, we believe that there's no specific benchmark that reflects what we do, which is a mix of liquid names and earlier stage names across the entire resource sector. There's really no benchmark of that kind. But we do internally kind of keep tabs with, the gold ETFs and other vehicles, ETFs, funds that are somewhat similar. And we're pretty happy with the performance that we've been able to post this year. And like you said, I think the concentration, the portfolio into fewer names has worked pretty well for us. And obviously, in particular, Omai, which is now our largest holding on pure merit, with this last month being a pretty good one for the name as well.
Yeah, I think this is it's a lesson we learned for ourselves, but I think it's something that's important for everyone, is that you do, like, to invest in these names, to invest in small cap mining, you have to do the work, right? It's one of Rick Rule's mantras on this, is that you have to do the work. You have to put the time in. And so, and it's easy. There's thousands of names to potentially invest in. And so it's easy to get distracted. And I think if you do the work and you like the name, you should put enough in that it makes a difference. I guess, for lack of a better description, trust yourself a little bit. And we've made that mistake where we haven't trusted ourselves or trusted the work that we did. And
before you say that, I think I just want to highlight again what you just said. Like, we've had so many big wins on small holdings, like small position weights, that could have made a big difference had we weighted them appropriately in the beginning. So I think that's where our conversation about fewer higher conviction names is coming from. because just like Omai, we are sitting on a fantastic win at the moment. We've had others like that. They just never had the appropriate weighting to make the impact on the entire portfolio or entire asset value that Omai, for example, has had in this case. So we're applying the lessons, and so far they're working.
A situation that I guess as a nice transition, an area where we've done work before and never had conviction is an area that's very topical this week, which is silver. And I think that we've noted this. This isn't it depends on the investor that you run into. Oftentimes, silver names. We've always noted that we have a problem with silver names or a challenge investing in silver names because of the quality of asset versus other commodities. And that the scarcity value then drives drives higher valuations on lower quality assets. It's a great point fundamentally, and we can all think that we're smart, but silver's moving, which means silver stocks are moving, and silver stocks when they move, as we know, and as probably the most famous investor in our space, Eric Sprott, approaches them. When silver stocks move, they really move, and you can make a lot of money.
And we know. I agree with all of your points. And we have another problem, which is that we have finally settled on a name that we wanted to be our silver exposure, which we spoke about a few videos back, which is MAG Silver. It's probably one of the few true tier one assets in the silver universe. It's in Mexico, but in terms of asset quality, I think it ticks every other box. And unfortunately for us, it's being taken over more prematurely than I would have liked to by Pan American. We're a month away, or roughly a month away from the vote. So there's still a chance for an interloper, a higher bid. It's not unheard of for the board to sort of try to renegotiate a deal. I don't think that'll be the case here because this is US listed. But we're in the difficult position where we may actually lose our single large silver holding. So we're literally forced to reevaluate all of our views and all of the investable opportunities that are sitting out there. And for those of you who are not familiar, Pan American Silver still a silver miner, but in a big way, but relative to its gold holdings now, I think silver after the merger, if it goes through with MAG, is only going to be about 30% of the production on a revenue basis. So it's not truly anymore a predominantly silver mine.
Yeah, well, it's interesting. Like, I mean, maybe to take a step back to think about this. What's the rush is that when silver starts to move, right? And silver looks like it's breaking out. 36 isn't exactly where everyone expects it to be relative to gold, but I think it's moving. So what happens is, when I was a sell side analyst, what happens is that all of a sudden you've got the sales desk calls down and says, "Oh, listen, what do you got with silver exposure, and who's got the most torque to silver in your portfolio?" Right? And you'd go through all your names and do silver sensitivities and what 5 and 10% increases would do. And you'd look across. And so everyone's got, most miners actually have silver exposures. This is part of the problem with silver, and why it's so hard why sometimes silver is late to move, and has very steep cycles, because it's a byproduct for a lot of things. MAG, world-class silver asset, everyone owns it already. Pan American Silver, Coeur and Hecla, probably the three biggest silver miners, they all have significant gold exposure in their portfolios. And so, much less so than they used to be. Even First Majestic, for that matter, has a meaningful amount of gold exposure, more silver focused than the other three. But you got this, so silver's moving, but, and we did this study in one of the early Compass episodes, is that we talked about this, but like they all trade like silver names still, because if you're a generalist investor, you're like, oh, I need silver exposure, I'm gonna buy Hecla, or I'm gonna buy Coeur, or I'm gonna buy Pan American Silver. And for the really torque hedge fund guys, they buy First Majestic. Torquey hedge fund guys, they buy First Majestic.
And you rinse and repeat every 5 or 8 years. Really, that's how it's worked in the past. But I think we decided to sit down and look at a few of the investable silver names to identify if we like them, if we wanted to invest in them. And I was telling Derek in an earlier call when we were discussing this is that I'm actually pleasantly surprised because what happens in our industry is that so often you sort of write ideas off or you label them too quickly. And then when you're forced to do the work, you start recognizing patterns and things that you actually like about them that perhaps you had overlooked or dismissed initially when the deal was put together. And I think we have some of that in this case. I think we have a few names that are better quality than average.
And I think that what we're looking for, and I think this is before we start talking about specific names and how we're going to approach it, one of the things that we're looking for, we're not just looking for bait at the silver price, right? We're not looking for something that's going to, with I leverage, I guess, to the silver price. We're not just looking for, because silver's up, 10%, that this stock is going to go up 30, right? It's not our investment style. It's not our theme. We're not that kind of, fast money hedge fund. I mean, if you're doing that, you could buy the SLV, or sorry, not the SLV, but the silver miners ETF, or the torqued silver miners ETF, if you really wanted to get aggressive. Or you buy one of those big names that we talked about, the Pan Americas, the Heckles, the Coors, the first Majestics. I think our approach is, we want that silver exposure, but we also want something that we think has strong fundamentals and something that has the ability to increase in value outside of the silver price, and just have the silver price as a tailwind is going to make it, give it even more pop and give us even more upside on the investment and sort of protect our downside a little bit more.
Because what I would say is, if silver stopped moving higher and just stayed where it is, would this company continue moving forward and stock price appreciating? And that's effectively what we're looking for. Yes, we certainly want to be here and get the tailwind from silver price, and hopefully, I think the last Eric Scott said was he thinks they could go to $200, and I hope so. It'd be fantastic for us. It'd be fantastic for a lot of people that we know in this industry. But we don't need to, but we like to invest where the fundamentals are set up in such a way that the company is improving and getting better, and the valuation should reflect that, even without the commodity tailwind. And I think in that light, we've identified opportunities that do actually have those characteristics.
Yeah. Do we want to talk about Sam?
And maybe before we say names, if you're watching this clip, write down your name so that we can the names that you like on the comment box, and then we can actually see what you're thinking.
I was going to say, before we talk about names that we don't own, maybe talk about the couple that we do own besides Mag in silver. And I think actually one of them is probably an interesting opportunity. First is Silver 47 that we still own. Going through, I think we talked about this previously, but going through what we think is a smart merger with Suma Silver, trying to bulk up, makes it a little more investable. Really good timing. Stock is moving with the silver price. They've been able to execute on financing. They're going through the process of the merger. Not easy undertakings, but I'm sure they'll get it done. I think, though, that's one where what might create the opportunity there is where you get a lot of other silver names run. These guys might be a little bit stuck in the mud because of that merger and the financing that's going on right now. And so definitely something that we're keeping an eye on and being proactive on that position. The other one that we have exposure to is Guanajuato Silver, a name that very, 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 very leveraged to the silver price. It's a very high torque from an operational basis, and it has some balance sheet leverage as well. Their most recent quarter is actually pretty good, ahead of the silver price move. And so I think that's a name that it's definitely one to watch. Very, very torquey though. And they do have some work to do to demonstrate consistency at the operations. But definitely one that another one that we're keeping an eye on from an exposure perspective. But the reality is, what we're here to talk about today is what we're going to, as we're looking at coming out on month end, we still want to have silver exposure in our portfolio. We still want, high quality, what we think is a high quality name. And so we started doing a deep dive on a couple of names that we've looked at previously and don't own, full disclosure, don't own right now. First is America's Gold and Silver. Very familiar name for us, very familiar management team for us, but a company that is, recently had a transformation and moving ahead. And the other one is Highlander Silver, which is a name that was recently put together, financed, and has a really strong group backing it. Sam, maybe we'll talk about go alphabetical order. Let's talk about America's Gold and Silver first.
Yeah. So if for those who are not familiar, there's some pretty good clips about this on the Crux channel, where Matthew interviewed both Eric Sprott and Paul Hewitt. And the story here is America's Gold and Silver is a company that's been around for a while, and typically, historically, had two pretty good operations or two pretty good assets: a gold asset and a silver asset. And the silver asset was not 100% owned. There was underlying ownership of the asset by Eric Sprott directly. It appears over the last few years, the asset was slightly neglected. And I think what's ended up happening is a transformational deal occurred where the Sprott ownership on this silver asset got together with the entire America's Gold and Silver to create a 100% owned structure. This is called the Galena complex. It's in Idaho, one of the most historic mining districts in the U.S. and perhaps the most meaningful silver mining district in the U.S. And it's that's effectively the home of Coeur d'Alene and Hecla, that district. So you're in a good neighborhood. But I think what's important is with the asset consolidated now, a new management team has come on, which is a management team that's familiar to us very well. We were very close to them from having invested with them in the past, which is Paul Hewitt, essentially with his operational team from the Klondike days, but also some of the newer corp dev people that he picked up during the Carrera days. And the plan is pretty simple. Pretty simple on paper, clearly. Take an asset that's been underinvested, put some money into it, and start producing the way it makes the most sense to make the most money. They're planning on changing the mining method. They're also doing some exploration to obviously continue to increase the resource and get confidence on the lower levels. And I think what's exciting for me, and I'll say this and I'll pass it back to you, is I've said this in many episodes, and I think I say it very often, is underappreciated infrastructure and capital spent. This has been a mine that's been in operation for, I can't remember how long, very long. It has a lot of underground development. It has a lot of development on surface. I think they're only using 15% or 20% of the milling capacity. That infrastructure is all on site and available, and in most of it in a condition to be used, which is not something that the market typically values adequately. And I think we're staring in front of an opportunity that could triple or quadruple the production in very short term. For disclosure, the company has not given any guidance for year 2025, or I think it was more 2026 for that matter. But I think when they do, I think it could surprise investors quite a bit.
Oh, I think we have confidence in the management team. We were investors in Karora and made money. Olive was an investor in Karora and made money. And both you and I, Sam, from different angles, were involved in the Klondike story from the very early days. You were a fund manager and held it when you were at US Global. And it was actually the first stock that I covered as a sell side analyst. And it worked out really well because we covered it. Paul really drove a turnaround there in the early days of Klondike. Didn't end quite as well as I think everyone hoped it would. And so I think that, and the same thing happened to Karora. Went in, bailed out a position, and fixed the operations. And I think, this is definitely something where you're looking at it going, okay, this, the expectation is that that's what's going to happen here, is that you have a guy who can execute on the turnaround. That's what they're going to do. And to your point on guidance, right? They are historically, Karora was this way and Klondike was this way. They were definitely a group that guided conservatively. And that's what you're supposed to do. When you're a producer, you put up, you guide conservatively, and then you hit the top end or go through the top end of your guidance. And so I think that is I wouldn't expect anything different from this time around, since it's the same group of people who are doing it, led by Paul. The other thing is that with America's Gold Silver is that you do have Eric Sprott is there as a major investor, backstop the financing on the transaction. So I think this is one, my assumption here is that he's brought in Paul to help turn this thing around, and I think that's a positive. I think that's definitely a positive sign, which means he's going to back it as well.
This has all the hallmarks of the Western Australian gold days 10 years ago, where smart operators were taking over assets that were underinvested, had a lot of infrastructure on site. And some of those names today are up 50x from the time when the deals were put together. It just feels a lot like it. It obviously is extremely dependent on execution. But again, Paul's coming out of two companies that he rebuilt effectively. Definitely worth giving him the chance to prove that he can do it again. And I have to say, this one looks pretty damn good.
Yeah, definitely something we're going to be paying attention to.
Screenshot the moment, because I don't say this about silver projects very often.
Well, the other thing, the other thing that you have to look at is that once the turnaround is executed and the company's in better financial shape, and is executing at its assets, the Silver Valley, where the Galena complex is an area that could see further consolidation. The other name that is one that we've looked at, and I had a sales guy pitch me pretty regularly here. We had an institutional sales guy pitch us pretty regularly. Was Highlander Silver, which is for lack of to use a music term, it's a collaboration between the Augusta Group and the Lundins. So comes with much like America's Gold and Silver, comes with a couple name brand investors on the door.
Yeah, this is a very different silver, but it's obviously a very different type of investment. This is a existing resource that's certainly not of the scale that would be of interest to this kind of people. So you can expect that they're going to put a lot of money to work to try to multiply this resource. I mean, Solaris was that way, where inside the asset, well known for some time, but never really drilled properly or aggressively enough. And the Richard Ward Group came in, and I remember Dan Earl, who's the CEO of Highlander Silver, he was the CEO of Solaris as well, mentioning that they multiplied the resource. It was not 50% more, it was not 100% more, it was multiples of the resource. And I think that's what they see here as an opportunity. 100% owned, well, they still have some payments to do. This is an old silver standard or SSR mining project. But it's effectively an aggressive drill play to try to prove the extent of the system. And the existing resource is a pretty exceptional, maybe excellent grade. If they can build tonnage around it and a depth, and effectively they're targeting the three directions: depth across the ore body, and also on the regional sites. This could turn out to be a pretty exciting story.
Yeah, I think so. I think that's the opportunity, and you've got guys who are going to really push it and back it. So a couple of, I guess, very interesting names that we're looking at, and haven't decided which one to add to replace Mang. We've got a little bit of time to maintain that silver exposure, but certainly something that is sort of something to it's a couple of names to keep an eye on, and we're obviously watching the silver tape and what's going to happen here as it moves ahead. But kind of as we noted, as we kind of circled back around this, is that what we don't want is we don't want something that's solely relying on the silver price to accelerate. We want something that has good fundamental improvements, both fundamental situations where the share price is going to improve, Both Highland and America's Gold and Silver have that. And then, obviously, but we like that tailwind of the silver price to protect our downside risk in the short term. So
pretty exciting on both opportunities. I think if you're watching this clip, what I suggest is think about where you want to be on the drill bit. That's where Highlander is going to make the returns. For America's Gold and Silver, it's much more about a management operational execution over the next 18 months. And one company is pre-revenue, the other one is a revenue generator. So they're pretty different from a stage, but they both have this quality that you just mentioned, that there's an organic plan within the company to surface value that's not uniquely dependent on the silver price. Obviously, the silver price is a huge effect in this, but it's not the sole condition or situation that will help or help these stock prices.
Well, the silver price will make it. I think the key thing is the silver price makes it easier for that value to be surfaced, whether it's the turnaround, right? When you get a little more cash flow from operations, gives you a little more flexibility as you're executing turnaround. In the Highland Silver's case, the positive silver price means that those drill results have a little bit more impact, lowers your cost of capital, allows you to redeploy faster and keep expanding. So I think that wraps it up for this week on silver. And I'll look forward to your comments and what you guys think of which silver names you guys like, and we'll speak to you next week. Thanks.